Hello everyone, I'm very much happy after looking at income tax question paper. Most of the provisions that were asked in the examination were covered very detailedly in the class. So I'm here with you to give a crisp analysis about income tax question paper today. So as usual, we all know first compulsory question will be asked with regard to total income calculation and tax liability calculation. So it is nothing new. First question is regarding total income. So the question was simple, the question was fair, and whatever the adjustments are there, all the adjustments are simple adjustments. We have discussed rent from house property, that is taxable under income from house property, right? So you should disallow this income. And another thing is, when you are calculating income from house property, whatever this rent from house property is there, this is to be taken as gross annual value. And from there on, you need to reduce municipal taxes, then you need to arrive at net annual value. Then you should claim deductions under section 24, thereby you should arrive at income from house property. And whatever rent from furniture is there, this is taxable under income from other sources. So there are these two incomes which you should reduce when you are calculating PGBP income. Sales were done by account payee check. Why this point was given? First of all, at the end of the question, he is asking three questions. First question, he is asking you to calculate PGBP income if SSC opts 115 BAC. Second question that is being asked is, he is asking you to calculate business profit if 44 AD is chosen. Do you remember section 44 AD presumptive income? Like here it was said all receipts were received through bank. That means what? You will offer 6% of the sales as presumptive income. And the business profit is computed as per normal provisions of Income Tax Act, and he does not opt for section 115 BAC. See, question, he is asking you to calculate total income in each case, and he is also asking you to calculate tax liability in each case. Please don't get confused. Many of the students, what here they will do, they will only calculate business profit. No, you should not only calculate PGBP income, you should calculate total income, but under three cases. In first case, when you are calculating total income, as like you should consider SSC has chosen 115 BAC concessional tax rates. In second case, when you are calculating total income, you should consider SSC has chosen presumptive income under section 44 AD and he does not choose concessional tax rates. That means in second case, you need to calculate total income considering SSC is offering his PGBP income under presumptive basis and SSC is paying taxes under regular tax rates. Under third case, you need to calculate total income considering PGBP as per normal provisions and SSC has not chosen 115 BAC, that means under regular tax rates only. So in first case you will calculate tax liability under concessional tax rates. In second case you will calculate tax liability under regular tax rates only but PGBP income presumptive basis. In third case you will calculate tax liability as per normal provisions of PGBP and as per regular tax rates. Is it clear? Now, hope you have understood this question. So here all the sales were received through bank, so you can offer 6% of the sales as PGBP income. Very simple adjustment, and like there is overvaluation of opening stock and closing stock. This adjustment we have discussed in the class, it is also simple only, and like this provision is regarding section 43B. We have discussed very clearly section 43B and this adjustment also we have done in the class. And administrative expenses include 25,000 paid as donation to National Children's Fund. See, this is not business expenditure, right? You should not claim this expenditure. This expenditure should be disallowed. And another important point, generally many students get confused here. As per 40A3, maximum cash limit, that means 10,000 is the cash limit. Beyond 10,000, if you make cash payment to a single person in a single day, it is not allowed as deduction. However, if you are making cash payment to transport operator, then 10,000 threshold limit is not applicable, 35,000 threshold limit is applicable. As the payment here is 30,000, which is less than 35,000, this expenditure is allowed as deduction. So no adjustment is required. What many students do here, many students will disallow this expenditure, but actually this expenditure is allowed as deduction, because when you are making payment to transport operator, like 10,000 threshold limit is not applicable, 35,000 threshold limit is applicable. And this is capital gains related adjustment. So you should not consider while calculating PGBP income. Depreciation includes 1200 as depreciation on trademarks. For trademarks, what is the rate of depreciation applicable? 25%. But he calculated depreciation 15% only. So you need to do that adjustment also. It is also simple one. He deposited 50,000 in public provident fund. Amount deposited in public provident fund eligible for deduction under section 80C. Am I correct? And life insurance premium. This is also eligible for deduction under section 80C. He paid interest on education loan. This is allowed as deduction under section 80E. Very much careful. When you are calculating total income under concessional tax rates, that means like when you are calculating tax liability under section 115 BAC, chapter 6A deductions are not allowed except 80 CCD2 and 80 JJAA. Now, like when you are calculating total income as per regular provisions, you can claim all these chapter 6A deductions. But when you are calculating total income as per concessional tax rates 115 BAC, you should not claim 80C and 80E. You should be very careful. That is the adjustment which you need to do when you are calculating total income as per section 115 BAC. Very clear? As per regular provisions, these deductions are allowed, 80C and 80E. As per concessional tax rates, 80C and 80E deductions are not allowed. I hope you have done this adjustment. And we have discussed these adjustments very clearly. When you are choosing concessional tax rates, chapter 6 deductions are not allowed except 80 CCD2 and 80 JJAA. Good. That is the only twist. This is one checkpoint. Another checkpoint is 30,000 rupees. This is second checkpoint. Other than these, remaining all are normal provisions only, which you can calculate very easily. Next, coming to second question, it came from residential status chapter. Right from the beginning, we are saying continuously residential status chapter is very much important. So second question, in second question, subpart A and subpart B, two parts. Like in second question, there are three sub questions, right? Out of three sub questions, two sub questions are asked exclusively from residential status chapter. So this is like all these are very easy. We have discussed all these points in the class. Only one point where you may get confused is second point. Income of non-resident, non-citizen of India from shooting of cinematographic film in India. What is the question? In question, he is asking to tell whether this income is accrued or deemed to be accrued in India or not. Do you remember business connection concept? If any income is arising in India because of business connection, we will consider that income as income accrued or arised in India. However, like income earned from shooting of cinematographic film in India by non-resident or non-citizen, that is covered under exception to business connection. That means what? It will not fall under business connection. If it does not fall under business connection, this income is not accrued or arised in India, and this income is not deemed to be accrued or arised in India. Many people may commit mistake in the second point. Rest all, third point also, house property is situated in India. If house property is situated in India, like income is to be considered as deemed to be accrued or arised in India. These 2 points, like I think hardly students may commit mistake in second point and third point. First, fourth, fifth, sixth point, they can do it very easily. Even this point also we have discussed in residential status 1 chapter and residential status 2 chapter. These kind of adjustments are there in our material also. These are not new. You can, I hope you have done these adjustments very clearly. Next, C, third part. This question is relating to TDS under section 194Q concept. This question has come from concept TDS intersection 194Q. Like, who is required to deduct TDS? Buyer is required to deduct TDS. When he is required to deduct TDS? In preceding financial year, if his turnover is in preceding financial year, if his turnover is greater than 10 crores. Here, who is buyer? XYZ is buying. That means XYZ is buyer. Who is seller? ABC is seller. What is turnover of buyer? Turnover is 12 crore rupees in 21-22. That means in preceding financial year, turnover is greater than 10 crores. This condition was satisfied, right? In preceding financial year, turnover was greater than 10 crores. So buyer is required to deduct TDS. When he is required to deduct TDS? Only if the payment crosses 50 lakh rupees. Here, what is the payment? 40 plus 20 plus 12. That means like 60 plus 12, 72 lakhs. Payment crossed 50 lakh rupees, right? So TDS is required to be deducted under section 194Q. Very much clear. This is easy. And when you see turnover of ABC, that means ABC is seller, right? Turnover of ABC in preceding financial year is 6 crores. That means it is less than 10 crores. So from seller point of view, seller is not required to collect TCS under section 206C1H. However, buyer is required to deduct TDS under section 194Q because turnover in preceding financial year is greater than 10 crores and in current previous year transaction value, that means the payment crossed 50 lakh rupees. So TDS is required to be deducted under section 194Q. And there is one adjustment. Many people, out of 100%, 90% of people will commit mistake in this point. What is this point? Read clearly. Will your answer be same if gross turnover of XYZ during financial year 21-22 includes 4 crores towards supply of material for charitable purpose? See, when you supply material for charitable purpose, is it for business purpose? That means like out of the total stock that is purchased by him, 4 crores worth of stock is given for the purpose of business. Sorry, for the purpose of charity. Now, if you give 4 crore rupees for the purpose of charity, can you call that turnover as turnover for the purpose of business? It is not for the purpose of business, right? So, out of 12 crore rupees, you need to reduce 4 crore rupees because 4 crores is not relating to business. So, how much turnover is for business? Turnover for business is equal to only 8 crores. If turnover with regard to business is 8 crores, this is less than 10 crores, right? So, in this case, only in this case, TDS under section 194Q will not get attracted. That means like if out of total 12 crores, if 4 crores are given as charity, in such a case, TDS under section 194Q is not required to be deducted. Majority of the people will commit mistake when it comes to this point. This is one of the, accident spot. Many people might commit mistake over here. Next. MJ, a part-time director of ABC Limited, was paid amount of 2,49,000 as commission. This is with regard to section 194H. TDS is required to be deducted at the rate of 5%. This is also simple. And this is straight question, very simple question. We have solved this kind of question in our material also. TDS under section 194P. That means when it comes to senior citizen, he should have only 2 incomes. One is pension income, another one is, interest from the bank in which pension gets credited. So very direct question, you can do it very easily. I think after seeing this question, a bit of smile would have come into your face because this is from our material and I think straight question came with slight change in amounts. Direct question. Next, third question. This question is with regard to capital gains. There is nothing difficult adjustment over here. If you have done problems of capital gains, you can do this very easily. Yeah. In third question, second sub question, this is with regard to leave encashment. Those who have done leave encashment, those who went through leave encashment exemption, they feel very easy. And see, do you remember the exemption under leave encashment? Actual leave encashment received or statutory limit 3 lakhs or 10 into 10 months average salary or like cash equivalent of unutilized leaves at the time of retirement that you need to convert into months and you should multiply it with 10 months average salary. So very simple. Here he gave information from February 1st to 31st December. That means he gave information of 11 months, but you need to consider information of only 10 months. December month information you should not consider. You should consider information from February to November. That means what? Here you will take 6 months salary and here you will take 5 months salary. Okay. Sorry. February to July. February, March, April, May, June, July. So you will take 6 months salary, August, September, October, November. Here you will take 4 months salary. So 6 months into 22,600 plus 4 months into 22,900. So you will get 10 months salary. You need to do average of that 10 months salary. So that is one adjustment which you may find it difficult. Rest all is very easy. And like amount withdrawn from unrecognized provident fund was also given. If you withdraw amount from unrecognized provident fund, if it is employee's contribution, it is not at all taxable. If it is employer's contribution, taxable under the head salaries. If it is interest on employer's contribution, it is also taxable under the head salaries. If it is interest on employee's contribution, it is taxable under income from other sources. You can calculate very easily. Another accident spot is she already received exemption 59,000. And second time she is claiming exemption for leave encashment. Now this time statutory limit is not 3 lakhs. Statutory limit is 3 lakhs minus 59,000, which will be 2,41,000. That is another accident spot. So when you are calculating exemption for leave encashment, you should not take statutory limit as 3 lakhs. You should take statutory limit as 2,41,000. See, this C question very simple. He asked you to calculate, he asked you to determine under which head these incomes are taxable. Dividend, this is taxable under IFOS. Advance forfeited, this is on or after 1st April 2014. This is also taxable under IFOS. Cash gift greater than 50,000, taxable under IFOS. And 99,000 pension from employer of deceased wife. See, when it comes to pension, this is taxable under IFOS, but total amount is not taxable. You can claim deduction 1/3 of pension or 15,000, whichever is lower. You should remember that deduction, then only you will do this rightly. Otherwise, you may commit mistake. So total 99,000 is not taxable. From 99,000 you can claim 1/3 like deduction. How much is the amount of deduction? 1/3 of pension or 15,000, whichever is lower. Fourth question, this is also simple question. Actually this question belongs to set off of losses. So there is income from owning and maintaining racehorses. This is taxable under IFOS. Income from crossword puzzles. This is also taxable under IFOS. Income from agricultural land in Haryana. This is not taxable. This is exempt. Dividend income, again this is taxable under IFOS. Income from cycling business 1,50,000. Loss from warehousing facility for storage of edible oils. Storage of edible oils. Is it specified business or normal business? This is normal business only. This is not specified business. Warehousing facility for storage of agricultural produce. Warehousing facility for storage of sugar. They will come under specified business. As this is normal business, this loss can be set off against income from cycling business. Okay. Share of loss from PR associates partnership firm. See, partnership firm losses can be set off only by partnership firm. Now whatever the share of loss that is received by partner cannot set off partnership firm loss. Okay, partnership firm loss can be set off only by partnership firm. Now whatever the share of loss that is received by partner, this is dead loss. Okay, that means what? This loss you cannot set off against other incomes. This loss can be set off only by partnership firm. So no adjustment is required. This point is given just to confuse you. Next, brought forward losses are there. There is brought forward loss from house property. Is there income from house property? There is no income from house property. So whatever the brought forward loss is there, this you cannot set off. This will be carry forwarded to subsequent years. Loss from activity of owning and maintaining racehorses. Careful. There is income from owning and maintaining racehorses, right? So against this income, you can set off this loss. Whatever 37,000 loss is there, 37,000 loss you can set off against income from owning and maintaining racehorses. Loss from gambling, this is dead loss. this you cannot set off. Unabsorbed depreciation, this you can set off against PGBP income. Speculation loss can be set off only against speculative business income. Here there is no speculative business income that is given, so this also you cannot set off. This you should carry forward to subsequent years. Next, Mrs. Jai, wife of Mr. Jai, got a salary of 1,20,000 from PR Associates. That means during the year she is not qualified for the job. See, 4 equal partners means what? Share of J share is 100 divided by 4. That means J share is 25%. 25% means this is greater than 20%, right? That means J is having substantial interest in partnership firm. From that partnership firm, J's wife received salary without any qualification. Now, even though salary is received by J's wife, that salary is clubbed and taxable in the hands of Mr. J. Okay, remuneration to spouse concept. So here whatever 1,20,000 is there, this is taxable to Mr. J. But total 1,20,000 is not taxable. From that you can claim standard deduction of 50,000 and only balance 70,000 is taxable. B point, I am very happy. This is with regard to deduction under section 80G, this B point. So he asked you to calculate deduction under section 80G. Check donation to National Defence Fund. This will fall under category 1. 100% deduction is available. Check donation to government for promotion of family planning. This will fall under category 3. 100% deduction is allowed subject to qualifying limit. Total deduction is not allowed. Deduction is subject to qualifying limit. Check donation to approved charitable institute. This is category 4 donation subject to 50% qualifying limit. 50% deduction is allowed subject to qualifying limit. How to calculate qualifying limit? See, this 60,000, this is completely allowed. But if you want to claim these two deductions, then you need to calculate adjusted total income. So, what is formula for adjusted total income? Adjusted total income is equal to gross total income minus chapter 6A deductions except 80G. So, gross total income will be 11 lakh plus 70,000. It will be 12.4 lakhs minus chapter 6A deductions are 70,000. That means adjusted total income is 11.7 lakhs only. Now, for category 3 and category 4, how much deduction is allowed? Actual contribution or 10% of adjusted total income, whichever is lower. How much is actual contribution? 35 plus 120, that means 1,55,000. 1,55,000 or 10% of adjusted total income means adjusted total income is 11,70,000. 10% means 1,17,000. Whichever is lower means 1,17,000 is allowed as deduction. Out of 1,70,000, first priority should be given to category 3 and balance amount should be adjusted for category 4. So total 35,000 can be claimed under category 3. Balance amount how much? Like category 4 balance is 82,000, but total 82,000 you cannot claim as deduction into 50%. That means 41,000 is only allowed as deduction. Okay. So this you can do if you have done problems on 80G means. See, he asked theory question. In theory question he gave two options. You can write about tax collection at source for overseas remittance by an authorized dealer. See, this is with regard to like when authorized dealer is making payment, threshold limit applicable is 7 lakhs. Do you remember? 206C 1G I think. If you are making payment of authorized dealer is making payment of more than 7 lakhs, he is required to deduct TDS at the rate of 5%. However, like out of education loan, if he is making any foreign remittance, then he is required to deduct TDS at the rate of 0.5%. Very simple. And tax return preparer, from return of income chapter, there is this theory question. Right from the beginning, we are discussing like theory question can be asked from return of income chapter. So theory question was asked as expected. So I hope some of your doubts were cleared through this session. I hope I have given enough clarity to you with regard to certain provisions. Thank you very much. Bye.